Good afternoon. My name is Josh Mindlin here at Chaikin Analytics, and I'd like to welcome you to the Survival Guide to Volatile Markets, How to Build a Reliable, Repeatable Trading Process. Chaikin Analytics. Chaikin Analytics is not registered as a broker-dealer or investment advisor, either with the U.S. Securities and Exchange Commission or with any state securities regulatory authority. Chaikin Analytics is for educational purposes only and is not a trade advisory service. Past results of any trading system or methodology do not guarantee future results. Please be sure to submit your questions using the Zoom Q&A window, which you can access in the upper left-hand corner of your screen. I'll be available to respond to your questions. This webinar is being recorded, and a replay will be sent to all registrants tomorrow. Dan Russo started his trading career as a specialist and member at the New York Stock Exchange. Prior to joining Chaikin Analytics, Dan was an institutional sales professional where he combined the firm's fundamental investing ideas for hedge funds and other clients. Dan is a chartered market technician and is the co-chair of the New York Chartered Market Technicians Association chapter. To get us started, here is Dan Russo.
All right. Thank you, Josh. And thank you, everybody, for joining us today. So really happy to be here just in light of everything that's going on in the market. Wanted to present our views and our survival guide for volatile markets. As Josh said, we're going to walk through my process for identifying ideas, both bullish and bearish ideas, regardless of the market environment, but really kind of how I think about the market and my top-down approach. And before we dive in, a little bit about me. I have been on the street for 18 years. As Josh said, I started my career at the New York Stock Exchange, and I worked my way up to become at the time called specialists. Now they're called market makers. But from there, I transitioned to an institutional equity sales role. And that's where I became a chartered market technician as well. So what that entailed was going through a process of taking 3 exams, self-study, and once you pass all of those exams, you earn the right to use the Chartered Market Technician's designation. And I'm also really proud of the fact that I'm the co-chair of the New York chapter of the CMT's Association. Being in New York, it is the largest chapter. So, it was honored to be asked to do that. And it really puts me in contact with some of the smartest people in the industry who I talk to on a daily basis. Now, I joined Chaikin in March of this year, and prior to that, I spent 10 years on an institutional sales desk covering large institutional investors. So when you think of institutional investors, we're talking about the large mutual funds and hedge funds, predominantly in New York, but also in Connecticut and other parts of the country. And I mean, that was a really solid learning experience for me, because when you're dealing with institutional investors, in particular hedge funds, on a daily basis, you really get some good insights into how these investment professionals look at the market. And that drives a lot of what I do on a daily basis at Chaikin Analytics. And I'm also a frequent guest on Bloomberg TV. So here's my action shot from earlier this year, talking about the S&P 500 on the set of Bloomberg. So as we kind of dive right in, what I'm going to do today is walk you through the keys to my stock selection process. And it really is a top-down approach. First, we kind of look at what's going on in the market, and we'll talk about that. Then we try to identify the strongest and weakest areas of the market currently. And we want to buy bullish stocks in the strongest parts of the market when they become oversold. We want to avoid the bearish stocks in the weakest parts of the market, or potentially look at buying put options on those stocks to play for the downside when those stocks become overbought. And then we use our proprietary signals to enhance performance by helping us time our entries and our exits. So really this year, we've gone from what was in 2017, what we like to call an uptrend on autopilot. So 2017 feels like a long time ago, but it was really just a steady trend higher, to now in 2018, a roller coaster of a correction, not once, but twice as we're going through it now. So as we look at a chart of the SPY, the ETF that tracks the S&P 500, we can see we made our high a little over a month ago, and it's been a waterfall decline since. And really what's interesting to me is we use Chaikin Money Flow to tell us what institutional investors are doing. And you can see that the institutional investors really started using this recent strength in the market as an opportunity to unload some of their positions. And throughout that time, momentum has been getting progressively weaker. So in my mind, I think that we have support here at the 2650 level, which is where we were trading for the past couple of days. And should that support level break, I think we're looking at 2580 or $258 for the SPY as support and as an area where we can think about the market beginning to form a base. And then just kind of looking at one of the key groups within the market, the Qs, the QQQ ETF. This has kind of been the leader to the downside. And again, we see a similar dynamic at play where at the market top just over a month ago, institutional investors were coming out of their stocks. So the people who are my former clients were using strength in the market as an opportunity to lower their positions. And I'm kind of asking the question here, are we going from leading to lagging? We look at relative strength. It's a very important part of our process, and we show it on all of our charts. The relative strength of the Qs against the broader market, the SPY, has been strong throughout most of this year. And now all of a sudden it's beginning to wane and has actually gone negative. So I think to the extent that the Qs, the growth stocks that were driving the market higher are underperforming the market, it's going to take a while for us to start the base building process. And you can see here with the Qs, we do have downside to those lows from earlier this year at around $155. So really have gone from that uptrend on autopilot to more of a roller coaster correction. And now more than ever, having a reliable, repeatable process that you can go to day in and day out and that you can stick to is really, really important. So with that in mind, as the backdrop for the market environment, the way we look at stock selection is that fundamentals drive the market, but emotions drive the market to extremes. And we feel that the path to profits is actually combining the fundamentals with the technicals. When I sat on an institutional equity sales desk, I had a stable of research analysts who were conducting fundamental analysis on the companies that they covered. And then what I would do is provide a technical overlay to the work that they were doing. So I've been combining fundamentals and technicals for over 10 years, and I continue to do that every day. I write a note for Chaikin Analytics members, and every day in that note, I'm combining the fundamentals and the technicals to find the best opportunities in the market, whether it's on the long side of the market or whether it's on the bearish side of the market. And really, one of the key challenges that we have as investors, especially now when the market is declining, is we're bombarded with information. There is a flood of information out there. On any given day, you come to your email box and you probably have hundreds of emails pertaining to the market, and it can really become overwhelming. And that really is one of the key challenges for us as investors. And the solution to that is Chaikin Analytics. Chaikin Analytics, whether it's on your desktop or on mobile, provides done-for-you research so that you can cut through that flood of information and identify what's important and what's likely to drive stock prices either higher or lower. And what drives everything that we do is the Chaikin Power Gauge. It's a simple but powerful tool that you can utilize to identify a stock's potential. We like to think of it as your GPS for navigating the market, regardless of the market environment. We rank stocks from very bullish to very bearish based on a 20-factor model that was built by Mark Chaikin. And it helps you identify where a stock is headed. It's a clear, tested summary of a stock's potential to either outperform or underperform the market. And what's really interesting to me is that, Mark Chaikin is well known as a technician. When I was studying for the CMT exams, obviously read about Mark's work and, had to know the formulas behind the indicators that Mark developed. And when he called me up, I was sitting at my desk and I received this phone call and he introduces himself. He says, "Hi, this is Mark Chaikin." And I kind of embarrassed myself. I said, "Like the money flow guy?" And he said, "Yes, like the money flow guy. But, I have this model that I've built." And what really struck me about the model is that, as I said, Mark is a well-known technician. I'm a technical analyst. The model is 85% fundamental. And the fundamental factors that go into the model are the factors that I know institutional investors are looking at on a daily basis when they're making their stock selections. We look at financials. These are the metrics that value investors look at. Your Warren Buffetts of the world, metrics like long-term debt to equity and valuation metrics such as price to book value and price to sales. And then your growth investors, they're looking at the earnings metrics, right? Are earnings growing? Are companies' earnings surprising to the upside or to the downside? What is the trend in those earnings? Are they trending higher? Or are they trending lower? And how consistent are the companies at meeting or exceeding analysts' expectations? So 15% of the model is then technicals. This is my bread and butter, what I'm looking at on a daily basis. And then really what sets us apart is what we call experts, but you can think of it as sentiment. We kind of look at what are analysts doing with their ratings? Are they upgrading stocks or are they downgrading the stocks? What are they doing with their estimates? Are they raising estimates or lowering estimates? Stocks that are seeing rising estimates tend to outperform the market. We look at what the short sellers are doing, and we also look at how the stock is performing relative to its industry and how the industry is performing relative to the overall market. So when I saw this model, it immediately clicked to me. What I was doing with a stable of analysts, I'm now doing here with the Chaikin Power Gauge, providing a lot of the research for me and then me providing the technical overlay to what we're seeing on the Chaikin Power Gauge. Because really what the Chaikin Power Gauge does is it cuts through the clutter. All of the inputs that investors look at on a daily basis to try to figure out what a stock is doing, we distill down for you into a rating with done for you research that runs from very bullish to very bearish to help you identify the likely outperformers and avoid the likely underperformers. So if we combine the Chaikin Power Gauge with my investment process, that gives you a directional edge, putting the fundamentals together with the technicals into a quantitative model, and then using our signals and Chaikin money flow to find better entries and exits. That gives you the directional edge that you need regardless of the market environment. And the performance of the power gauge, in my mind, really speaks for itself. This is data going back to the beginning of 1999 and running until the end of last year. And you could see here, our very bullish stocks on average return 20% a year. And our bullish stocks on average return 12% a year. And in that time frame, the average stock in the Russell 3000 has returned 9% a year. So right away, we know that when we're looking for long ideas, we want to look at stocks that have very bullish and bullish Chaikin Power Gauge ratings, and we want to avoid the stocks that have bearish or very bearish Power Gauge ratings. And that's how I come to the world and look at it on a daily basis. And from there, once we've identified the trend in the market, we can look for the strongest parts of the market and the weakest parts of the market. And again, that is driven by the Chaikin Power Gauge. So we can look at all of the sector ETFs and we can see how many stocks in each ETF are bullish or very bullish, how many are neutral, and how many are bearish. And this was a snapshot that I took yesterday afternoon. And you could see the market has taken a more defensive posture as we've sold off here. I mean, utilities are one of the strongest sectors in the market, along with healthcare and consumer staples. So we know that when we're looking for long ideas, currently, we want to look at the utility sector. We want to look at the consumer staples sector, and we want to avoid those sectors of the market which are the weakest. So real estate doesn't have any bullish stocks. It has 14 bearish stocks. Energy, materials, these are the weak parts of the market that we want to avoid, or potentially look for opportunities on the bearish side. And we can actually, if we want to, take that one step further and look at those same metrics on the individual industry levels. So my top-down process starts with the market, moves to the sector level, and then we start identifying stocks. We use the Chaikin Power Gauge and that industry group strength in conjunction with Chaikin money flow and Chaikin relative strength to identify the names we want to buy or avoid. And then we use the Chaikin buy and sell signals to tell us when we want to buy them and when we want to get out of the way. So what we're looking for, the types of stocks that we want to buy, are what we refer to as Chaikin classic bulls. These are stocks that have a bullish or very bullish Chaikin Power Gauge rating, have strong relative performance, meaning they're outperforming the market, and have strong Chaikin money flow. And a great example of that recently has been Centene Corp. And when we look at our charts, we look at them from the bottom up. So this ribbon here at the bottom of the screen tells us where the power gauge rating is and where it has been over the course of the past year. And then when we move up from there, we can see that Centene has been outperforming the market. And really, since April, Chaikin money flow has been bullish. So institutional investors are accumulating this stock. And then from there, we identify when we want to buy it. We want to buy very bullish stocks that are outperforming the market when they become oversold based on our proprietary overbought, oversold indicator, something you're not going to find anywhere else, and have bullish money flow and trigger one of our buy signals. So that's the process. That's what we call a Chaikin classic bull. And the stocks to avoid, the stocks you want to sell from your portfolio if you own them, you want to avoid them if you're potentially looking at them, or even look for opportunities on the bearish side. These are the stocks that we refer to as Chaikin classic bears. These stocks have a bearish or a very bearish Chaikin power gauge rating. They have weak relative strength, meaning they're underperforming the market, and they have weak Chaikin money flow. And a really great example of that throughout 2018 has literally been a household name, Whirlpool Corp. You probably have used their products. You probably have their products in your home. Just because they make a good product doesn't mean it's a stock that you want to own. And here you can really see why. To me, this is an angry looking chart. Right? The ribbon at the bottom of the screen tells us where that power gauge rating has been. You can see that the stock has been underperforming the market with bearish money flow throughout the majority of 2018. And really, back in late April and early May, we actually identified it for a bearish trade when it was around $150 because it became overbought based on our proprietary metric. And from mid-April until yesterday, the stock has declined from $150 to a low near $100. So you can see that these trends, they actually persist over time. And that's why we want to avoid these stocks and look for opportunities to take advantage of them via put options on the bearish side. And really the key is what we call our dynamic duo. And it's when we combine the Chaikin power gauge rating with Chaikin relative strength, because the dynamic duo finds big winners and big losers, because we know that superior returns come from stocks that outperform the market, right? For 10 years when I was covering mutual funds are measured based on their relative performance. So it's not enough for them to own a stock that's going up. They need to own stocks that are going up more than the market. And that's what relative strength shows us. And that's why relative strength stands alone as a bullish or a bearish indicator for individual stocks, because those big investors, the Fidelities of the world, who manage large pools of money, this is how they're measured. They need to buy the stocks that are going to outperform. So we look for the stocks that are outperforming, and we look to buy them when the opportunity presents itself from a tactical standpoint. And the way we do that, once we know what we want to buy, we need to know when we want to buy it. For that, again, done for you research, we provide you with 6 sets of buy and sell signals to let you know when one of those bullish stocks, which is outperforming the market with positive money flow, is setting up at an opportune time for an entry on the long side. And on the flip side, when one of those Chaikin Classic bears sets up at an opportune time to take a bearish position, our signals will alert you to that. So one of the ways that I look at the world, and when you become a Chaikin Analytics member, you will receive my daily research note, is I think very thematically, because that is the way that the institutional investors that I covered look at the world. So one of the key themes throughout 2018 has been something that I've dubbed the retail renaissance. Towards the end of last year, the retail stocks were left for dead. They were being treated like they were going to zero, and the rationale for that was that Amazon was going to put all of the brick and mortar retailers out of business. And I remember this clearly because I went on Bloomberg TV the day before Thanksgiving, and when I asked the host what she wanted to talk about, she said, well, we're coming up on the holiday shopping season. Why don't we talk about retail? And I thought that that was a great opportunity because it was something that I had been looking at. And really at the time, the most crowded trade amongst institutional investors was to be long Amazon and to be short all of the mall-based retailers or the brick and mortar retailers. And if you look at relative strength, right at the end of last year, the retailers began to outperform the market. And they've been on a steady uptrend ever since. And you can see really around the middle of this year, the institutions started to get on board to drive that uptrend even further. So with that in mind, we identified retail as a strong part of the market while the market was heading higher. So part of my process helped me identify Macy's as a long idea. Again, we read the chart from the bottom up, and we could see that back in mid-May, Macy's had a bullish power gauge rating, was outperforming the market, and had bullish Chaikin money flow. It became oversold based on our proprietary indicator, and it triggered one of our buy signals. And I identified it as a long idea around the $28 level 3 days before they reported positive earnings, and made a run to $40. So by my top-down approach helped me identify Macy's as a solid long idea, and the signal within Chaikin Analytics helped me identify when was an opportune time to put it on, and that was a trade that paid off for our clients. Another one that recently came up was Ross Stores, right? The same theme, bullish stock leading the market. It became oversold with bullish money flow. It had triggered a buy signal following their earnings report, and I identified it as a long idea for our clients around the $95 level. And this was back in early September. And as the market has traded off, the market corrected yesterday. It was down 10% from its all-time highs. Ross Stores traded over $100 today. So that's up. That stock is up about 6% in a time frame where the market is down nearly 10%. And that's what we're talking about when we're talking about relative performance. We want to own the stocks that are outperforming the market because they're likely to go up even as the market is trending lower. Another big theme of ours throughout this year has been software taking over the world. Famous venture capitalist Mark Andreessen, this was his quote a few years ago. He said, software is going to take over the world. And, another early stage private investor who I'm friendly with, Howard Lindzen. Howard started the website called Stock Twits. He has a riff on this take. He says software is eating the world. So software had been a big theme of ours throughout the majority of 2018. So in a bullish market, we identified a part of the market that was outperforming. So we looked there for long ideas. And, one of the bellwethers within the software space was Adobe. And back in late April, we identified it in my morning note for Chaikin Analytics clients because the process was there. The dynamic duo was in gear. The stock had a bullish rating and was outperforming the market. It became oversold with bullish money flow and triggered a relative strength buy signal. So at $220, I made it my bullish stock of the day in my note to clients. And the stock went on to head towards $280 before, rolling over with the latest downturn in the market. And you can see now that, if you ask me now, do I want to own Adobe? You can see that the process doesn't line up, right? It's no longer a bullish rating. Money flow is negative. It's closer to overbought than it is to oversold. So the same process works to get you out of the trade as well. Another name, well-known name in the software space, right? Every day it seems you read about another hacking. Security software has been a big theme. So, we identified Checkpoint, ticker symbol CHKP, for all the same reasons. Bullish stock that in July began to outperform the market. Chaikin money flow solidly bullish. Institutional investors were coming to the stock, but at the time the stock was overbought, so we held off for a bit. But when it became oversold and triggered a money flow buy signal, one of those 6 buy signals, we identified it as a long idea at around $112, and it traded up to around $118 in short order. So that is kind of how I look at the world. Essentially, what we're looking for is what we like to call the ideal setup. Warren Buffett is famous for saying they don't call balls and strikes on Wall Street, so you don't have to swing at every pitch. You can wait for your pitch. And really, if you wanted to boil it down, that's what I'm doing every day for our clients here. Again, thinking thematically. Up until recently, small cap outperformance had been a major theme. So we use that to our advantage. We actually looked at a couple of different themes to come up with some really big winners for our clients, one of which was Blue Cora. They were a business services software company. So here we had a small cap stock. Small caps were outperforming. And we have a software company. Software was outperforming. And in March, it began to outperform the market. In mid-April, the Chaikin Power Gauge rating turned bullish, and then in early May, the stock became oversold while money flow remained bullish and triggered one of our buy signals. So with the stock at around $24, we called it out as a long idea in my note to Chaikin Analytics clients. A couple of days later, the stock had positive earnings, major move higher on its way to $40. Again, same type theme, Proficient, small cap software company, begins to outperform the market in March. Power gauge rating is bullish. Chaikin money flow is bullish. Buy signal triggers at around $22, on its way to $28. So you can see time and time again, the process is repeatable and it's reliable, utilizing the done-for-you research of the Chaikin Power Gauge and my technical overlay. And it's that repeatable process, thinking thematically that, Ken, one of our subscribers, took his account from $235,000 at the beginning of 2017 to $1.2 million 7 months later, and led him to tell us, would not have been able to achieve this without your system. So again, thinking thematically, population in the United States is getting older. Healthcare services has been leadership. That's been a major theme throughout 2018. And you can see it here. In January, healthcare services begins to outperform the market. And you can see the Chaikin money flow. Institutional investors are coming to the group. So we have a leading industry group in the market. So natural place to look for potential long ideas. So one of the names that we identified was WellCare Group. Again, that dynamic duo is in gear. Very bullish stock, outperforming the market. Becomes oversold back in late July, but money flow stays bullish. Institutions are buying the stock. And when one of our buy signals triggers at around $245, we made it our bullish stock of the day right before the stock was ready to run to $300. Another name within the group was actually at the time a name that I had never even heard of, LHC Group, part of the medical care industry group, right? So that healthcare services part of the market that had been outperforming. This stock begins outperforming the market in April, has a bullish rating in early May when it registers an oversold reading, but has bullish money flow, triggers one of our buy signals at around $70. And then it was off to the races, up to $100. And as I dug in, I just became more bullish on the name and had a lot of confidence, making it a bullish stock of the day in my note to Chaikin clients. And this is actually a recent one. The theme in my mind is still in place. If we look at Cigna Corp, ticker symbol CI, the same setup has presented itself recently. You can see we have a very bullish stock that's leading the market, became oversold with bullish money flow, and about a week and a half, 2 weeks ago, triggered our oversold buy signal. So I made it my bullish stock of the day for our clients. And, this is a theme that's playing out. The stock was a little over $200 at the time. Yesterday, it was around 210. So it's working for now, but I think I think this stock still has time to work out in a similar fashion to some of the other names that we've looked at here. Now, a lot of people ask me, how do you find these ideas, Dan? We rate 5,000 stocks, and the answer is I do not look at 5,000 charts all day, every day. In Chaikin Analytics, the research is done for you, and part of that is we have a screening tool, and this is an actual screen that I use to generate long ideas, and it's a screen that I used on a webinar that I gave back in August. And you can see I was using the Russell 3000 as my starting point. So we have 2,958 stocks, and I was very quickly and very easily able to whittle that list down to 18 names for potential long ideas based on the screening criteria and the stock having a bullish Chaikin Power Gauge rating. And one of the names that we identified on this screen had actually triggered a buy signal that day, NanoString Technology. So when I dug in and looked at it, I was able to implement my process. What we had with NanoString at the time was a bullish stock outperforming the market that became oversold with bullish money flow, and it had triggered that buy signal. This one was a relative strength breakout signal. So with the stock at around $11, we identified it as a long idea on its way to $16 following an earnings announcement. So that's the process, repeatable and reliable regardless of the market environment. And part of the done for you research is we will actually send you a daily email alert based on your watch list, right? So if you have a watch list of names that are potential long ideas, they're bullish stocks that are outperforming the market with strong money flow, you add them to a list within Chaikin Analytics, and then every day you receive an email before the market opens alerting you that something important has happened with your stock. And in this case, this was back on June 26th. On my bullish watch list, I had Citrix on there. Again, software company. Software was strong at the time, so I was trying to identify software stocks. And the email alerted me to the fact that Citrix had triggered one of our buy signals, an oversold buy signal. That was right here. So you can see the process again in action, right? And when we received that buy signal, we made it a bullish stock of the day at a little over $100 on its way to $115. But now the market's changed a little bit, and just as much as we like to play offense, good defense actually is what leads to good offense. It's knowing the stocks to avoid or being able to take advantage of bearish stocks that can really help you generate offense in your portfolio. And Chaikin Analytics is a Philadelphia-based company, so here's our homage to the Super Bowl champs. And really, what's happened here, as I said, the market has become more defensive. And in my note to Chaikin Analytics clients a few weeks ago, I highlighted that when we had been highlighting the 2873 level for the S&P 500. So for the SPY, $287 was roughly the level. That was our line in the sand. And we said at the time that if we break that level, the market is likely to head lower, and we want to think about a more defensive posturing. So, I wrote that in my morning note to Chaikin Analytics clients, and it's largely playing out. The market has continued to sell off here over the past few weeks, but the defensive parts of the market are actually beginning out to outperform. So consumer staples are now leading the market. So here we can see, based on relative strength, that in early October, as the market started to break down, consumer staples began to outperform relative to the SPY. So with that in mind, again, as I said, I think thematically, just because the market's rolling over and taking a more defensive stance, that doesn't mean we can't find good opportunities on the long side of the market. We identified Helen of Troy. It's a bullish stock. Rating here at the bottom of the screen is a bullish stock, outperforming the market, became oversold, and at the time, it still had bullish money flow. It triggered a buy signal, so we made it a bullish stock of the day at $115, and as of yesterday, it was trading close to $125, and this is as the market is going lower. This is what we mean, again, relative strength. If you can find the names that are outperforming the market, you can do well regardless of what the market is doing. You have that opportunity. Utilities, another traditionally defensive group. I showed you the sector analysis earlier in the presentation where we said the utilities were the strongest sector of the market. As the market sells off, utilities have been outperforming the market since early October. And you can see we've broken out and we're holding above that breakout level. This is the XLU, the utilities ETF, and we're holding above that breakout level at $52. So actually on Sunday, in writing the weekly note for Mark Chaikin, I identified American Electric Power, and this is an idea that's still very much in play in my mind. And it was identified using the process regardless of the market environment with a slight tweak. AEP is a bullish stock that's outperforming the market. Here's our overbought, oversold indicator, and what intrigued me here was that in the face of a declining market, this stock wasn't able to become oversold before our indicator began to move higher. That told me that this is a strong stock. Chaikin money flow is bullish, and it's been bullish for a few months. So we identified it as a long idea. Still early days for the idea, but I just want to show you that even in the current environment, the process is repeatable and the process is reliable using the done-for-you research built into the Chaikin Power Gauge with a technical overlay, combining those fundamentals with the technicals. Alex, wrote in, our program changed your life. I can't tell you how happy and grateful I am to have found Chaikin Analytics. Alex found us through Jim Cramer, and it's a day that changed his investment life. And so again, thinking thematically, this is the way I'm looking at the world when I kind of write my note every day and I'm looking at the market. One of the big outperforming sectors of the market throughout 2018 has been consumer discretionary. And here's the XLY, the consumer discretionary ETF. And you can see down here, consumer discretionary has been outperforming the market really since I kind of dubbed that retail renaissance back at the end of last year. But because I know how institutional investors think, having covered them for 10 years, I know they don't just stop there. They dig in. They see what's going on under the hood within consumer discretionary. And if investors who took the time to do that work would have found that the consumer discretionary sector was actually weak, and that weakness was being masked by Amazon, because during this entire run from April until the highs earlier this month, late September, Amazon rallied over 50%. And Amazon is roughly 25% of the consumer discretionary index and the consumer discretionary ETF. So as I was doing my work for our clients, knowing how institutional investors think, I dug in under the hood too. I looked at how consumer discretionary was performing on an equally weighted basis. So neutralizing for that 25% Amazon exposure and looking at the average stock within consumer discretionary would have painted an entirely different picture, where you would see that the group began to underperform the market back in July as it rolled into this sideways consolidation. And earlier in late September, institutional investors really started selling the consumer discretionary names. So with that in mind, I started looking for opportunities on the bearish side within consumer discretionary, right? So one of the groups of consumer discretionary that we've wanted to avoid has been the leisure and entertainment group, right? Here's the PEJ is the leisure and entertainment ETF. And you can see back in late July, it began to underperform the market. And shortly thereafter, institutional investors really started selling this group, and you can see the intensity of this bearish Chaikin money flow as the institutions have been coming out of the names that make up this ETF. So we thought it was a great opportunity to go looking for bearish ideas. And one of the names that we identified within that group was Wynn Resorts. That's ticker symbol WYNN. Right? So you can see Wynn began to underperform the market in June. This is the same process. This is what I mean when it's repeatable and reliable. We're just flipping it on its head and using it to the downside. Wynn, with a very bearish rating, it began underperforming the market in June. And then somewhere in mid-August, as it was continuing to underperform the market, the intensity of money flow became more bearish, but the stock was overbought based on our overbought, oversold indicator. It triggered one of the signals to the sell side, this one being our overbought sell signal, at which point I made it a bearish stock idea and suggested an options trade idea. That was at around $148. Yesterday, the stock was trading under $100, and when we closed our options trade idea, it was for a return of 158%. Another name, this was one that we identified recently, same group, same process. Another name that you all know, Domino's Pizza. What's been happening here is the relative strength has been waning as investors have been coming out of these names, and it finally went bearish. It started to underperform the market recently, but as it was waning, we could see that money flow was negative, and when the stock became overbought, I identified it as a bearish idea and again suggested a way to take advantage of that using put spreads, and our bearish put spread on Domino's returned 100% when they came out with earnings that disappointed the street, and the stock gapped down about 7% on the day. So there's the process again, just in reverse. Another theme, and that's been going on for a while, is home builders have been lagging, right? And these themes and trends tend to persist. And over time, the weak tend to get weaker, because if you look, home builders have been underperforming the market since late January. And all throughout this time, it was tempting to kind of call the sell-off in home builders overdone. But look what's happened here. Look what happens to a weak part of the market when the market begins to crack. The weak get weaker, and the trend accelerates to the downside. However, top of mind would be to look at the actual home building stocks for potential opportunities on the bearish side of the coin. But again, given my experience and my understanding of how institutional investors look at the world, I know that not only are they looking at the obvious choice, the home builders, so your DHIs of the world, or your Lennars or your Pulte's of the world, I know that the institutional investors are going to start to look within the home builder supply chain, which is why back in April, as the home building group was underperforming, I identified Mohawk Industries as a bearish idea in one of my notes, because themes and trends persist and the weak get weaker. We had a very bearish stock at the time. The rating is still bearish. That was underperforming the market, that became overbought with bearish money flow and triggered an overbought sell signal. So at around $220, I flagged this for our clients as a bearish idea. Well, they came out and missed earnings estimates recently, and the stock is now trading under $120. Themes and trends persist. The weak tend to get weaker. And by looking at the world through the same eyes as those institutional investors, my former clients, I'm able to find opportunities like this for our Chaikin Analytics members. And again, what we're doing here, using a repeatable process, using a quantitative model such as the Chaikin Power Gauge, we're taking our emotions out of the equation. And I'm going to leave you with Netflix as a great example of that. Netflix is a name that we all know. We probably all use the product. I use the product personally. I happen to love the product. I actually don't have network TV in my home, but that didn't necessarily mean that Netflix was a stock that I wanted to own. Stock is bearish, and it's part of that consumer discretionary group that when you looked under the hood was weak relative to the market, whose weakness was being masked by Amazon. And if you look, institutional investors have been selling the stock. Netflix actually began underperforming the market in late July. Back in late September, we identified it as a bearish idea when one of our signals triggered. Money flow was bearish, the stock was overbought, and it was underperforming the market. That was at around $380. Stock immediately collapsed to under 320, rallied back on their recent earnings announcement, but didn't retake that level and has subsequently now gone lower with the market as growth stocks have been sold off. Yesterday, the stock was under $280. So, it would have been very easy to say, I love Netflix. I love their product. I use Netflix every day. Just because it was a good product does not mean that it's a good stock. I took my emotions out of the equation and identified a profitable bearish opportunity for Chaikin Analytics clients. So back in 2017, Chaikin Analytics was selected for a Benzinga Global FinTech Award, and it was the winner for Best Trading Idea Platform. And I want to show you one of the aspects of Chaikin Analytics that helped us win that award. Speaking of Netflix, this is actually what we refer to as our Netflix for stock ideas. This is our discovery engine. And remember, I showed you Domino's Pizza as a short idea that we identified. Well, that got me thinking, what are some other names that have similar attributes to Domino's that might make sense to look at for bearish ideas? And on the flip side, what are some of the names that if you own Domino's, you might want to sell your Domino's position and swap into? So much like if you plug a movie into Netflix, it will suggest other movies that you like, that you may like based on what you're currently watching. Well, by plugging Domino's into our discovery engine, we identified other bearish ideas as potential trades to the downside. Dunkin' Donuts, Chipotle, Yum Brand. These are names you all know. Wendy's and Jack in the Box. And if you were an owner of Domino's, maybe you wanted to think about swapping into another name within the same industry group that has the potential to go higher. Recognize Ross Stores, it's one that we talked about. AAP, AutoZone, and Walgreens are potential swap ideas. But let's focus on Wendy's, because I actually made that a bearish stock idea recently, and I think this is one that's still in play because the process made sense. We had a very bearish stock underperforming the market, become overbought with intensely bearish money flow. So at around 1750, we identified it as a bearish idea for Chaikin Analytics members, and we're going to see how it plays out. This is a recent idea. It's one that's still in play. But again, there's the process. Knowing how institutional investors look at the world and then implementing my process allowed me to identify Wendy's as a potential bearish idea for our clients. And now also within Chaikin Analytics, we have our options play platform. One of the ways that you can generate income in the market is to sell call options against positions that you may own, right? And when the market's going down, selling those call options could provide some cover as the stock trades lower. Obviously, Google is a name we all know. It's a widely owned name. And a lot of people own Google because they plan to own it for the long haul. However, you can see that Google can be volatile. It was recently over close to $1,300, and it subsequently traded down to $1,000. But you may not want to sell your Google, but you may want to protect yourself and generate some income in the meantime. So using our options play in Chaikin Analytics, you can uncover a covered call strategy that tells you how to set up a trade to sell call options against your Google position to generate some income, as well as protect yourself in the event that Google does trend lower. And we even give you, it's based on statistics. I mean, this will generate $880 in premium. This was as of this afternoon. And that's a 13% annualized return. And based on the stock's historical volatility, it has an 82% chance of expiring worthless. So that's all part of the Chaikin platform, and you can use that to generate income in volatile market environments. So that is Chaikin Analytics. It's a proven stock selection platform that allows you to implement a reliable, repeatable process using done-for-you research. Now, Chaikin Analytics, an annual subscription is $21.95, and within that, you receive the 20-factor model, combining the fundamentals and the technicals. You get the discovery engine, which I just showed you, to help you identify other ideas based on the work you're doing. So you can identify Wendy's based off of your interest in Domino's Pizza. But as a webinar special tonight, we are going to knock $400 off the price of a one-year subscription to Chaikin Analytics. So for $17.95, you'll get everything that I showed you in addition to that stock screener to help you utilize our done-for-you research to find ideas on both the long and short side of the market. Our options play module to generate options ideas, both for bearish trades as well as for income-generating opportunities. We provide you with intraday charts as well as earnings details so you can find out the key important statistics during earnings season. What are the analyst estimates? What did they report last? And importantly, when do they report? And in addition, every week on Sunday, you receive Market Insights. This is a weekly newsletter authored by Mark Chaikin. It comes out on Sundays in the afternoon and gives you everything that you need to know to get yourself prepared for the week ahead. Plus, when you become a Chaikin member, you'll have members-only access to our weekly strategy webinar, which I host. It takes place every Monday afternoon, where we go through my thoughts and what I'm seeing in the market and the way that I'm looking at the market currently. You'll receive unlimited coaching and support, including group sessions and one-on-one coaching from our client success team, as well as my daily morning insights email, where I utilize this process to identify names on both the long side of the market as well as on the bearish side of the market. So again, Chaikin Analytics, normally $21.95, but we're knocking, as a webinar special, we're knocking $400 off the price. An annual subscription to Chaikin Analytics, $17.95. We have our team standing by, or you can head over to chaikinanalytics.com/guide to sign up. And I want to thank you for taking the time to be with me here today.
Dan, thank you so much for taking the time. Everybody, thank you for attending. There are a few more questions I'm going to finish up on, but you can, in the chat window, take advantage of the great offer Dan is making you. The discount code will automatically be applied. That's www.com/guide, or you can call us right now at 877-697-6783. Again, that number is 877-697-6783. I put all this into the chat window so you can access it there. Again, thank you all for attending, and we look forward to seeing you in a future Chaikin Analytics member session.